Hello and welcome everyone to the week ahead commodity report, where we of course will be reviewing the markets for the week ahead. So far the month of August is certainly shaping up to be an incredibly lucrative month, which has really continued to present savvy traders with an endless flow of back-to-back trading opportunities to capitalize on the short-term macro-driven volatility. Now this month has been another classic example of that, with the announcement that the US Senate have approved Joe Biden's mega $3.5 trillion stimulus plan. So with that, Joe Biden's ambitious infrastructure spending frenzy and green energy revolution ultimately means the US is going to need more commodities, specifically industrial metals, which includes copper, platinum, lithium, nickel, and rare earth metals. Now, all of these commodities, they play a vital role in Joe Biden's multi-trillion-dollar green energy and infrastructure spending plan, and will go into everything from electric vehicles, batteries, to plug-in charging stations and solar panel farms. Lithium prices, they took center stage this month, rallying to the highest level since July of 2018. Lithium prices, they're now up over 200% this year, and they're forecast to increase fivefold by 2030. Lithium's explosive rally also pulled up copper, advancing 2.5% into Friday's close. Elsewhere, sugar, which is a key component in biofuels, that has played a huge part in Joe Biden's green energy revolution and surged to 4-year highs. Looking ahead, one of the biggest events that traders will not want to miss out on as we go into next week will be the Federal Reserve's Jackson Hole Symposium. Traders expect Fed policymakers could use that event as a platform to announce plans around the highly anticipated wind down of their massive quantitative easing program, as well as interest rate hikes. However, there is huge potential that the Fed could surprise the markets by holding off tightening their monetary policy too quickly, especially in the light of the rising Delta variant risk. Elsewhere next week, US second quarter GDP numbers and the Fed's preferred measure of inflation, the core PCE price index, those will be major focal points for traders. Watch closely to gauge the timing of the Fed's tapering plans. As you know, volatility creates opportunities. Banks, hedge funds, they're making multi-billions capitalizing on the week-to-week volatility, and it's not so different for the retail market. The majority of our clients at the Gold and Silver Club, utilizing a proprietary research-driven trading approach, have already made in excess of 6 and 7 figures so far this year, and we still have another 5 months to go. So if you have been kicking yourself for missing out on some of the biggest trading events so far this year, you still have time to make 2021 your best year yet. So with that, let's move over to the charts and we'll talk you through exactly what we're looking at here as we head into a new week. First of all, just moving over to gold. So gold in the last week followed expectations, which was to be range bound with resistance at 1800 and finding support at 1770. We in fact talked you through that in detail at the beginning of the week with our gold commodity reports, where we gave you that specific forecast. That has all followed through expectations. That all came off the back of the 3-day impulse move that we had the previous week, where we built into 4 positions with our clients at the Gold and Silver Club, and on that Friday we banked 2,250 points profit. So of course, for every 1 lot contract that you'll be trading, that's $22,500 of profit. For every 10 lot contract that you'll be trading, that's $225,000 of profit. So now, over the last week, gold has continued to consolidate those gains, but where we have seen some big moves, especially on Friday, has actually been on copper here. So copper, we had a great opportunity to build further positions there into Thursday's close on Friday as well. It's up 2.5% into Friday's close here, and we're essentially looking at more upside on copper as we go through this cycle and this quarter. So copper, we do like here at the lower end of the swing lows, which were retested again back in June and also back in April as well. So we've come back into key area of liquidity there. We've seen a strong bid into the close on Friday, and alongside that we have seen hedge funds and money managers, their overall net long position is supportive for higher copper prices. Now moving over to platinum, alongside copper, platinum also caught a bid into Friday's close, up 2.4%. I would definitely keep an eye out on the industrial metals as we go into the final week of August here for a potential impulse move to the upside, and platinum coming back and reclaiming that swing high around the 1020 zone that was broken down from last week. Now, I would keep an eye on the dollar index as well, which started to pull back into Friday's close. Typically, the last week of August, you can see pressure on the dollar, which does tend to favor a number of the metals here. We're setting up quite nicely at the moment with copper as we go into next week. That's the same with platinum. I would also suggest keeping an eye on the 23 down to the 22 US dollar per ounce zone for silver as well. That's in fact going back to the swing lows that were tested last year back in November, before we then saw silver prices rally from $22 all the way up to 30 US dollars per ounce. So we're all the way back down towards those lows which were tested back in November. So again, 23 down to 22, I would certainly look at evidence of buyers coming in at that zone. We have seen an increase in hedge funds and money managers into metals in the last week. In fact, particularly into gold, which has been much more resilient. The gold to silver ratio does continue to trade at 9-month highs, so we could see gold continue to lead into next week. What I would look out for going to next week is whether gold can reclaim back above the 1800 level and make a move back towards that 1808 zone. So I'm keeping a very close eye on that as we go into next week. We still have a core position on here with gold, and we want to see whether gold is able to break back above that 1800 level and springboard back to the recent swing highs that were tested over the month of July. The catalyst for that could of course be the Jackson Hole Symposium at the end of next week. That typically causes big volatility for the markets. That's where you want to capitalize on that volatility. And of course, Palladium too. The move that we've had on Palladium here has provided the potential for a big opportunity as well once the dust has settled. If you go back to the last time Palladium had this much of an extreme sell-off to the downside, which is going back to the peak of the pandemic back in March of 2020, we saw Palladium completely recover over a 10,000 point move to the upside in a matter of 1 week. I would absolutely keep an eye on this market. Typically, once Palladium forms a low and starts reversing, it can do that extremely quickly. Even here back in June, just a couple of months ago, when we saw a 3,500 point sell-off within the matter of 2 days, Palladium managed to completely reverse and reclaim that swing high within the matter of 10 days, rallying over 4,000 points. So it's absolutely a market I would keep an eye on as we go into next week once the dust has settled and you see buyers come back in. Again, Palladium, hedge funds and money managers, they've added to their overall net long position again in the last week. Overall, the net long position, it sits at 76%. So of those hedge funds and money managers who do have a position on Palladium, 76% are long. And as you know, bull markets, they don't move up in a straight line. They will zigzag, which is why when you have these big sell-offs, they can provide massive opportunities. Just look at gold the previous week. We had a $100 sell-off to the downside and then a 100-point rally in the opposite direction, which enabled us to bank over 2,000 points profit in the matter of just 1 week. So you absolutely want to capitalize on this current volatility. Commodities, they zigzag, which really provides savvy traders with back-to-back trading opportunities. As you know, technical analysis does not work. We're in a highly data-driven and event-driven trading landscape. In these times of heightened volatility and rapidly surging inflation, the importance of having an essential income-generating skill like trading has become a must-have necessity. If 2020 has taught us anything, it's that you should never rely on just one income stream. Building multiple income streams, it's no longer an option, it's a priority to make sure that you're inflation-proof and you can thrive, not just survive. The greater your data and intelligence, the greater your edge in navigating these fast-moving markets with precision, accuracy, and the highest levels of profitability. If you want to maximize your money-making potential and really thrive, not just survive in these fast-moving markets, then you need to adapt your strategy to the current market conditions. You need to trade like the hedge funds, the money managers, the institutions, utilizing a professional, research-driven approach. You want to be utilizing data, statistics, market intelligence, understand the facts in the market, major catalysts which will have the biggest moves for commodities. Alongside that, you need to learn the daily, the weekly, the monthly, the quarterly cycles for each commodity. Marry that up with the intermarket correlations, the ratios in the market, key areas of liquidity, and of course understand macroeconomics, the fundamentals in the market, alongside the key statistics and market intelligence that help you to react fast in the market, and of course marry that up with the positioning by the hedge funds, money managers, banks and institutions. That will help you massively to get an edge. So with that, if you would like to join our community of successful traders, learn the research-driven approach to the market, and join our professional mentorship program, there is an opportunity for you to do so. As a member, you get access to our exclusive live trading room webinars. You get access to real-time trade ideas, access to institutional research and market intelligence, access to our private Members Academy website, and also support and one-to-one mentoring. For more information, just go to www.jointhelivetradingroom.com. The link is also below this report in the description, so just click on the link, make an application, and we will of course get in touch with you ASAP. And do make sure you subscribe to our YouTube channel. That way you're always kept updated with all of the latest commodity reports.